It's me, Big Ugly Jim. I will be yammering for a little while, as is my wont, and hopefully it'll be a fun time for all. First thing I want to talk about, self-help is self-love. Now, that may sound like I'm talking about, a positive sort of thing. That's not the direction we're going today. This self-love is a reference to masturbation in this particular instance, and that's the Fight Club quote. And no, I'm not one of those right wing chuds who's like, Fight Club was all about how fight the system, and also COVID is a lie. Not that guy. All right, as you can tell by the extremely cool title thing, we're going to talk a little bit about wealth inequality. Wealth inequality, no S poggers. We all know about the whole idea of like the top 1% and how much bullshittery there is there. When we talk about wealth inequality, a lot of the times we talk about and generational wealth specifically, we're talking about home ownership. Because the thing is, let's say I buy a home and then I die and I leave that to my children. My children have an asset that I have put money into and that is now available to them to do things like they can sell it, they can use the house, whatever. They could sell it and buy their own houses. Like, these are all good things for people who are not already financially stable. Having that investment available to them at any point in their lives is a huge bonus. It's good. And so when you look at inequality in like the States and Canada and you say, okay, well, there are people who, started, generations back, started off in a far worse position. So, for example, people who are African Americans that didn't own houses because they were slaves. Many generations have gone by versus the honkies who, owned their houses, and their children had that immediate infusion of additional revenue and all that kind of stuff. So it makes their lives easier than the people who didn't have that, and that translates every time every new generation when each generation either can move a little bit forward or a lot forward depending on the circumstances versus staying in the same spot, thus the imperative of generational wealth. And one of the areas that we don't talk about as much is stock ownership. Now, I'm not a stock owner. I don't have an RRSP. I don't have any of the things that would be smart investments for a young, upwardly mobile pro dude like me. I don't even own this grand house of mine. I have nothing. And if I was to die tomorrow, I would leave my children a love, a good handshake, but that's pretty much it. Idea of stock ownership is pretty important in terms of being a vassal for that kind of generational wealth. Theoretically, if I, owned a whole bunch of stocks and bonds and I died and I gave them to my children, same principle, they would be in a better position. I want to share this article because this creeped me right the fuck out. I'm also going to share a couple links in the chat. And if I do bother the whole doing video editing and being good at what I do, then I'll have them up here, up there. This is from CNBC. So, the wealthiest 10% of Americans own a record 89% of all U.S. stocks. Essentially, the wealthiest 10% of Americans now own 89% of all U.S. stocks held by households, a record high that highlights the stock market's role in increasing wealth inequality. The top 1% gained more than $6.5 trillion in corporate equities and mutual fund wealth during the COVID-19 pandemic, while the bottom 90% added 1.2 trillion, according to the latest data from the Federal Reserve. The share of corporate equities and mutual funds owned by the top 10% reached the record high in the second quarter, while the bottom 90% of Americans held about 11% of individually held stocks, down from 12% before the pandemic. The stock market, which has nearly doubled since the March 2020 drop and is up nearly 40% since January 2020, was the main source of wealth creation in America during the pandemic, as well as the main driver of inequality. The total wealth of the top 1% now tops 32%, a record according to the Fed data. Nearly 70% of their wealth gains over the past year and a half, one of the fastest wealth booms in recent history, came from stocks. Now, that's an interesting concept. The idea that we've had one of the fastest wealth booms in history. Everyone I know should be going, wait, what? When did a wealth boom happen? Because I'm fucked, right? All I'm hearing about is food prices are going up, gas prices are going up, every price is going up. We have massive problems. We're screwed. The world is fucked. We just got to get through. And meanwhile, we're in the fastest wealth boom in recent history. This is wealth inequality. Now, how did the top 10% get this? That's an interesting question. The growing concentration of wealth, despite millions of new investors coming into the stock market for the first time during the pandemic, leading to what many have labeled the democratization of stocks. Robinhood added more than 10 million new accounts over the past 2 years and now has over 22 million, many of them held by younger first-time investors. Yet, while the market may be owned more broadly, the gains and wealth it creates are not being more widely distributed. Rosenthal said that while the army of new investors may be numerous, they are still small, with the average account size at Robinhood at about $4,500. When the markets rise, they will have far smaller dollar gains than the wealthier investors with hundreds of thousands or even millions in stock holdings. Many of the younger investors also bought in at higher prices compared to bigger investors who've been in the market for years and see larger gains. A good example of how that translates is if you think about buying a stock in Microsoft. If you bought stock in Microsoft, say 30 years ago, it would have been a lot cheaper and would have grown far more over the course of your investment than buying it today. Buying it today would be almost a ludicrous investment because you're never going to see a strong return on that. Many of the new investors have more of a trading mentality, buying and selling stocks rapidly with leverage in hopes of quick gains. While the strategy can create big winners, others may see lower returns than those of investors who simply buy and hold for the long term. So the reason I don't own stocks is because I have no faith in the integrity and honesty of business. My particular age demographic, I watched Bre-X happen. If you're not familiar, Bre-X was a Canadian gold mining company that was just huge, and oh my god, they were gonna do great things, and then they crumbled. And they crumbled because they were lying about their assets and their viability, and eventually those lies came out. Then there was what's the Enron? Enron, we've talked about a bunch of times on this channel. Enron decided that they would grow 10% every quarter, or every year, whatever their magic number was, and that was an unreasonable target, an impossible target, that resulted in them fudging and finding new, very legal ways to lie about what they look like. And when the truth came out, it resulted in a lot of people losing their retirements, a lot of people blah 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 blah. Terrible. So why does any of this matter? It's because, like it or not, the stock market is, in our current system, very important. If you have a pension through your work, it's probably through the stock market. And therefore, and the reason that I don't have an RRSP and the reason that I don't have mutual funds and all of these things is because I have no faith that any investment I make today will actually translate into a better quality of life. This came about because, again, the wealthy barber, which I alluded to earlier, was all about, you gotta buy mutual funds, you gotta buy all these things, and you spread your money around to some high yield mutual funds and some long term mutual funds, and that way you can retire a millionaire. And that's true. You know, the reality is you can retire very wealthy, except that if everyone retires very wealthy, then very wealthy isn't very wealthy. It matters if you get in early, like a Amway or anything else. When you get in early, you get to see all of the rewards. When you get in late, you get to see all of the people above you who did well. I worked with a woman once upon a time who owns shares in a company called Celllock, which during the Enron failure was another company that failed for similar reasons. Celllock was again a Calgary company, and they were doing cellular technology stuff. And she had bought in, I think she bought in at $12 a share. And every time they would go down to the US and do like a big trade show, their stock would skyrocket to like $65 a share, where it was normally valued around $25, $30 a share. I'm bullshitting numbers, but the premise is there. And it was because investors would hear about this company and the things that they were doing, which were revolutionary. And oh my God, we want to buy up all these stocks. So they would buy them up and artificially jack up that price. And then the price would normally, filter right back down to where it was supposed to go. And this is a good example of where the whole day trading thing and making those investments that you can sell off quickly makes sense. I was like, what are you doing? You bought in at $12. It goes up to $65. Sell the fuck out of that. And then buy it back when it goes back down to its normal $30 valuation. Then every time you do that, you build more money. This is a good thing. But her answer was, I'm going to wait until it hits $100 a share. Then I'm going to sell. Okay, fine. Celllock never did hit $100 a share. They got, I think 85 was the highest they got. I could be way wrong on that. And maybe they did hit 100, but she did not sell. And then the truth came out. And the truth was that company wasn't worth anywhere near what they were even valued at. And the company folded. And so she ended up selling her stocks. I think she got out before the absolute end. And she sold them for $8 a share. So she took, long term, a dramatic loss. She basically, sold them for 2/3 what she bought them for. And all along, she could have sold and bought and sold and bought and sold and bought and been way up in the equation, but she wasn't. The way that stock markets, that the top 10% have managed to get all of this additional stock money has not been through Robinhood or anything like that. Largely, it's been stock buybacks. It's been things like, PPP loans. PPP? Is that what they were called? I don't know. U.S. loans to corporations to make sure that their staff don't get fucked over, and then they fuck over the staff anyway and buy back all their stock. And that stock ownership ends up being in the hands of the wealthy. So I wanted to show how this, what do these numbers actually mean. This is a link to a video. I'm not going to go through the video because you should watch it independently and therefore give all of the views to the fantastic James from the internet. The video is called "The Wealthiest Families in the USA Now Own 89% of All Stocks." It's a really good breakdown of that, probably more so than I'm going to do. But I want to just pop open the Wikipedia page about wealth inequality in the US. I'm actually going to specifically skip down in the contents to U.S. stock market ownership distribution. Stock owned by the richest 10%. 2016, 84%. 2013, 81%. 2001, 71%. What that shows is these numbers are continuously climbing and have been for 20-ish years, probably longer, right? In March 2017, NPR summarized the distribution of U.S. stock market ownership, direct and indirect, through mutual funds in the U.S., which is highly concentrated among the wealthiest families. 52% of U.S. adults owned stock in 2016. Ownership peaked at 65% in 2007 and fell significantly due to the Great Recession. As of 2013, the top 1% of households owned 38% of stock market wealth. As of 2013, the top 10% owned 81% of stock market wealth. The next 10%, the 80th to 90th percentile, owns 11%, and the bottom 80% owns 8%. The Federal Reserve reported the median value of stock ownership by income group for 2016. Bottom 20% own $5,800. The 20 to 40th percentile own $10,000. The 40 to 60th percentile own $15,500. The 60th to 80th percentile owned $31,700. The 80 to 90th percentile own 82,000, and the top 10% own $365,000. NPR reported that when politicians reference the stock market value as a measure of economic success, that success is not relevant to nearly half of Americans. Furthermore, more than one third of Americans who work full time have no access to pensions or retirement accounts, such as 401ks, that derive their value from financial assets like stocks and bonds. The New York Times reported that the percentage of workers covered by generous defined benefit pension plans has declined from 62% in 1983 to 17% by 2016. While some economists consider an increase in the stock market to have a wealth effect that increases economic growth, economists like former Dallas Federal Reserve Bank President Richard Fisher believe that those effects are limited. So that is the other aspect of this that's important. Oh, I see. I got chat peoples. Hey, I am Canadian. Good to see you, my friend. The father of value investing, Benjamin Graham, explained his this concept by saying that in the short run, the market is like a voting machine, tallying up which firms are popular and unpopular. But in the long run, the market is like a weighing machine, assessing the substance of economy. The message is clear. What matters is in the long run is a company's actual underlying business performance, and not the investing public's fickle opinion about its prospects in the short run. Another way that this happens, that is really common and is the source of a lot of the striking that's been happening these last little while. Things like the aforementioned Frito-Lay and John Deere and Yahtzee and all these kinds of things. A lot of them are talking about their pensions, because their pensions are being removed or they're being replaced with things like, we'll match donations on a 401k, which in Canada would be your matching RRSP contribution. And that's significant. It was at one time that if you worked in a company, you would have a pension that you were buying into that would be there for you, theoretically, when you came time for retirement. And that was the responsibility of business as part of the benefits of them giving you or taking from you all of that chunk of your life, that they would be responsible for, having this investment available to you. That's a good thing. What actually is happening now is they're saying, we don't want to do that. What we'll do is match your RSP or 401k contribution. So if you spend $2,000, we'll spend $2,000. And that sounds good, except that your pension was a whole different monster that, A, the onus was entirely on them, and B, it wasn't tied to your overall economic situation. So if I only can contribute $500 to my RRSP, even though theoretically I could contribute, let's say, $10,000, but I only have at the end of the year $500 to contribute, that's all they have to contribute. If I don't have an RRSP, well, they don't have to provide for my future at all. And more and more people are in this position where, because we're starting further back, we don't have a leg up. We don't have this generational wealth, and it means that we're not starting to to build off of anything. If you think about what that means and the difference between having a pension versus buying into an RRSP and your own investment plus being matched by some company. The pension is there to protect you in your retirement and in your dotage. And this is a good thing. A lot of retirement homes and things like that will basically just eat up your pension. And if you don't have a pension, then that's less an option to you. I don't know what the fuck I'm going to do if I become infirm. The reality is that I probably just don't have any options there, and will just have to Roblox myself. But the company's making money, so that's what matters. The other aspect which is overlooked is the expertise of investing for a pension plan. Who is in a better position with experience and governance? You with your RRSP contributions, or a big company or government managing millions or billions on behalf of you? 100% agree. 100% agree. And the thing I talked about earlier with the whole day trading and smart investment, which again, I'm not like, oh, you should do this, because I don't fucking know anything about it. But that is the opposite of long-term planning for your success. And the idea that all of this pension stuff gets tied up in an economy where Enron can happen, and all of a sudden, your pension's just gone. Briex, your pension's gone. Sorry. Nortel, your pension's gone. Sorry. All of that shit. What do you do when you've been paying into for your career into a pension fund that is foundationally based on an unstable investment that just goes away? Well, I hear Walmart's hiring greeters. That's a thing. That's a reality. That's our future potential survival that is on the line because we're doing it ourselves instead of having a government or a skilled expertise corporation that's doing this work for us. All this shit, it's a genuine source of concern for me, and a source of concern that comes down to like, I will never have one of these things. A lot of my people are going to rely on these things as the wealth gap grows. This is a cycle that has to change and isn't, and that's fucking terrifying. The whole pension game is frightening. I love that Canada has a pension that is the Canada Pension Plan, and that I pay into. That's the closest thing to retirement planning I have is paying into Canada Pension Plan, which probably will not yield me a great quality of life when I am old and retired, but hopefully will be enough to keep the lights on. Companies used to give you pensions. Now they give you matching RRSP contributions. And that makes sense for companies. It does not make sense for people. So the strikes that are happening in the States right now, a lot of them are talking about, hey, where'd my pension? Why don't I have pension? How come all of a sudden I'm matching RRSPs and you're also paying me as little as you fucking can. So I'm not kicking a whole lot of money into my RRSP because I can't. And so you're not kicking a lot into my RRSP either. CPP, Canada Pension Plan, is structured to replace only 25% of your annual average salary. It was never set up for full pension to a max of 65K approximately per year. So if you work 65K a year for 40 years, you get 18,000. Yeah, 18,000 a year from the government. You better have a plan. Old age security. Gotcha. Old age security. Yeah. So, hopefully, the $18,000 a year that you get for your $65,000 a year career is enough to keep you out of the poorhouse, but it probably won't be. So yeah, you better have a plan. My plan is simple. I'm probably going to die poor. I'm hoping that once all of the support payments and all of the other stuff that I have to cover off, I can sort of scramble and build some safety net for myself, because I live in a capitalism where there will not be a safety net for me. I'm hoping that I can build enough that I survive off of that stuff, but I may not. And the answer is either I work in a Walmart or I don't. It's not a pretty picture, and that's something that keeps me up at night. But this is the world. This is why we fight, because corporations aren't there for us. They're gathering wealth and hoarding wealth like giant fucking smaugs on their pile of gold, and we're fucked. First off, I want to say thank you for watching. If you've enjoyed, please like and subscribe. It really does help me out. Thank you to my patrons that support me on Patreon. I am a little streamer, and these people are all really awesome for supporting me. Thank you to I Am Canadian. Special huge thanks go to my one prophet, Shithead Dave Anderson. And of course, my final tier of supporters is the Gods. This tier is the most expensive and likely to never have any members, but Patreon really told me I should have one, so it's true, I guess. There are no gods. I try to put up stuff at least once a week, and I live stream every Saturday at noon Mountain Time on Twitch, YouTube, and Facebook, like an old man. Again, thanks for watching, and have a kick-ass day.